Hail, as you know, I work for you, so I've been asked a lot over the last month or two, I guess, probably with a lot of the turbulence in the crypto market. Why not do should I buy for equities and do much more equity analysis? So, this is what we're going to do today. We're going to jump into Amazon.com. There's a couple of reasons why this one. One, I'm a big believer, and I believe there's a lot of untapped value. So, let's jump in and go to our Should I Buy series, which we normally do for cryptos, which are very successful. But now we're going to do it for equities. I've done a little bit of this in the past with things like Tesla and other names, Google, but here we are with Amazon. So let's jump in. And again, to be successful in the investing game, you need to have a diversified portfolio, but not too diversified. My strategy is to have three big high conviction names in crypto, three big equity names, and Amazon is my third. And in full disclosure, I normally have been trading in and out of Amazon for years and years, and I got out early 2021, and I just got back in a week or so ago. So I'll talk about why as well I did that. But in my other equity names, as you guys know, number one, Tesla, number two, Google, number three is Amazon. So of course, MicroStrategy is in there too, big position as well, but that's more of a Bitcoin proxy. So first of all, Amazon, why is it interesting? Well, Bill Miller, one of the top investors of our time, his portfolio is pretty much half Bitcoin, half Amazon. So if it's good enough for Bill Miller, it should be good enough for us. But let's dig into exactly what we see with Amazon itself. So first of all, the chart. The chart has been flat over the last 400 days. Which is kind of staggering because the stock market was pretty good last year. But you can see Amazon has not responded well. Now let's look at how it compares to the S&P 500 over the same 400-day period. The S&P 500 was up 43%, and Amazon was only up 4% over that period. So again, not a big mover. And the question is why? Well, a lot of stuff has been going on. They did very, very well in the early part of the C19 situation, but they slowed down and had some headwinds, especially with inflation and the ability to find workers. But some of their other businesses are incredibly powerful, and that's what we're going to dig into today. So let's first of all look at the post-earnings bump. Again, I've been looking at Amazon for a long time. And you can see here, this is the earnings, an earnings surprise or an earnings miss. And I put in some green arrows on the chart here to signify the December, the quarter that just closed. And I always know historically after Christmas, they do well. They have a pretty good earnings surprise, and we'll talk more about that in a minute as well. But here you can see, yes, they beat. Yes, they beat. They had a couple of misses, 2018 and 2020 early and September 2021. But apart from that, they typically beat. So I was pretty confident there'd be a post-Christmas bump. Now let's look at the quick summary of the earnings. So unlike other names, you see names like Google explode, especially with that 20-for-1 stock split. That was huge news. I was hoping a little bit for an Amazon stock split news, but that was not released today. Their revenue missed by a little fraction. You can see the number is 137.04 billion versus 137.82. So they missed by about 420 million. The numbers are just staggering when it comes to Amazon as well. And they also tempered Q1 expectations, but they did notice that Prime membership, they're going to increase the price. I did allude to that a week or two ago. I think it was January 20th. I touched on Amazon and saying it's bonkers cheap at this price. And here we are. So that monthly fee, we'll dig into exactly what that means, that extra $2 a month or $20 a year for the business. So let's look at the growth over the next 5 years out to 2026 and what it actually means with some history as well. So it is clearly one of the greatest growth stories of all time. Amazon is generating revenues that are larger than the economies of most countries. And these numbers, of course, are in millions, massive numbers. So when you see 2020 in the top left corner, 386, that's $386 billion. And 2026 for sales, pushing up against 928, called it $1 trillion in revenue. That's how big the business is. And they're growing at an annualized growth rate of about 15.76%. Now, the free cash flow, this is a very important one. The free cash flow itself is growing at 30% per year. They are printing money, and they could have 150 billion in free cash flow being spun off in 2026. That is bigger than the market caps of most companies like Royal Bank of Canada and Schwab and other big names. So just very, very powerful numbers. In addition, I calculated some earnings per share on the right-hand side. We could be bringing in about $200 in earnings per share in the year 2026. So the numbers are mind-boggling and very powerful. Now, a visual representation, I threw these things on a graph. And on the left-hand side, we have sales, the blue. And on the right-hand side, we've got red, which is free cash flow, and yellow, which is EBITDA, which is the earnings before interest, tax, and depreciation. And you can see, again, that 150 in free cash flow in 2026 is massive, but how everything is going up and to the right. Non-stop growth. We are going into a very fast growth period. So you got to consider 2020, 2021, the growth wasn't as high as expected because of huge investments in the actual underlying business itself. And this is why I am very, very bullish on this name over the next 5 years. So let's dig a little bit deeper. Let's compare Amazon to some other names like Tesla and Google. Again, it is unfair to compare apples to oranges, but in terms of a couple of comps, there's some interesting things that you can pull away from these summary of some of the key ratios I look at. And also, I've had requests for me to do more about which financial ratios I look at. So here is a good example. Forward price earnings ratio. Amazon 55, Google 21, Tesla 72. But again, we spoke about our Tesla PEG and Tesla growth ratio based on their most recent earnings. And in addition, the PEG ratio for Amazon is at 2, and it will be going down as we go forward. The 1-year target estimate from a top series of analysts is about $4,106. So the analysts expect big move from this company in 2022. And the last price, 2776.91, that's what we closed at today. It is up in after hours. I have to let you guys know that as well. And the distance to the analyst target from the price at close today is 47.89%. So if the analysts are right, this stock should go up 50% this year. Also, other numbers, distance from the 52-week high, 26% off of that. EBITDA, $60.4 billion, etc., etc. You can kind of dig into all those key ratios yourself, but the point is it paints a pretty good picture. Now, analyst target, as I mentioned, $4,106. That's the average target across scores of analysts. So that is kind of bullish. These are people that just live and breathe Amazon. Now, you could argue sometimes these analysts are completely worthless. For example, there were 52 analysts that were pro-Meta today on Bloomberg. You could have seen all the analysts that said strong buy, overweight, all these different analyst acronyms from all the top names like Credit Suisse, etc. But boy, did they miss their mark. So analysts aren't always right. But what I like to do is be very conservative. Now, when we look at distance from all-time high, if you look at a couple of things here, this is a cool chart from Y Charts. Amazon looks pretty oversold. Over the last year, some people say it's time to be greedy on Amazon. So when you compare the distance from the all-time high for S&P 500, it's about 4.9%, NASDAQ about 10%, and Amazon over 20% off. So you can see this is sometimes a good time to get into a position, good time to snipe at this low area. Now, this is what I talked about on January 20th, how Amazon Web Services alone is worth over $1 trillion. Prime, the membership subscription business, is worth $450 billion based on my back of the napkin math. And the market cap was kind of, it's $1.4 trillion today. That just didn't seem right. Is the rest of the business kind of worth nothing? And that's what I dug into today and did a lot more detailed analysis to the enterprise value of all these components. So these are the components that I appraised. There's Prime, which is the subscription business. There's Amazon advertising. They advertise a lot of products within Amazon itself. There's AWS, the biggest hosting facility in the world. There's Amazon, the retail business proper, which includes all of the logistics and trucks and factories and warehouses, etc. that they do. And of course, Prime Video, which is kind of a Netflix competitor. And there's a lot of interesting stuff going on with all of these different components. So here we are. I analyzed them all and broke them out. So first piece is Amazon Web Services, one of the businesses I'm probably most familiar with. The consensus of sales through 2026 is there. We touched on before, they could be doing $145 billion in revenue by 2026. It's also a very profitable business. Margins are about 30% on this business. So pulling all this apart, we can estimate the value of earnings in the year 2026 of being about $43 billion. And at a price to earnings ratio of 30, that'll bring the enterprise value to about $1.3 trillion. Literally, AWS in the year 2026 is worth the equivalent of the entire market cap of Amazon today, more or less, give or take $100 billion. So that is a nuts analysis, but let's go a little bit further. Let's look at the Amazon advertising value. Their advertising business, their margins are even higher. Margins run about 46%. And it's estimated that the advertising revenue will be about $84 billion. But remember, nearly half of that is pure profit. So the profit in 2026 could be as high as $38 billion. At a PE value of 30, that's worth about $1.16 trillion. Again, that is the shining star of the business. Extremely high margin. Think of Amazon as one big shelf, and they can charge people to put their merchandise on their shelf. They own the eyeballs. They can monetize it very powerfully. So that's why some people always say, don't buy what Amazon recommends or advertises sometimes, because you never know what's going on behind it. But anyway, let's go a little bit further. So Prime is said to about to surpass Netflix in terms of customers and views. And if that is the case, that means that the Amazon Prime video business, just the video component, could be worth over $200 billion. Now, when we look at Netflix took a huge beat down. They went from nearly $400 billion market cap down to $200 billion. I conservatively just took $200 billion for this analysis as the value of this in 2026. It could be an awful lot higher. It could be $1 trillion itself, but I just left it in there just to sandbag a little bit, as I like to do. And the Amazon Prime membership, they have 155 million customers. They're paying $119 a month approximately. That's about $18.4 billion. The new Prime revenue, because they're increasing the price to $139 from $119, they're basically pulling $3 billion out of nowhere. And the enterprise value of this business in 2026, I estimate to be about $450 billion. So let's add all these together and see what we got. So you got your AWS, 1.3 trillion, advertising, 1.16 trillion, Prime subscription, 450 billion, Prime Video, 200 billion. The retail business, which again, warehouses, trucks, logistics, all of that, all of the ability to execute and deliver packages within 24 or 48 hours is worth, I gave it conservatively $1 trillion. And the total enterprise value, when you add all these together, is about $4.126 trillion. Now, the value per share, assuming the share count does not change between now and the year 2026, it's just a conservative estimate that I took, is about $8,139 a share. And the value, if the PE of Amazon is 50 in the year 2026, currently it's about 60, that would be about a $13,565 share price. So what does that mean? So to people who invest in the crypto world, it's like, well, it's not a very big return, but it is in traditional worlds. And again, it's important to have a diversified portfolio. And Bill Miller, this is half of his portfolio for a reason. So the value per share at a price to earnings ratio of 30 in 2026 will bring about a 24% compound annual growth rate on your investment starting now. And it'll take you to an $8,000 value again in 2026. And the PE of 50 would be a 37.34% compound annual growth rate. And your $2,700 per share will go to $13,000. So that's what I think. I think there could be some headwinds in the first half of 2022. They still are challenged by finding workers. It's really, really hard in this inflationary environment. The great resignation, people are leaving, so they've got to pay more to attract talent, get more stock and everything else to keep them on as loyal employees. And that's one of the big challenges. But the value of the enterprise, when you look at all the component parts together, it's a very, very interesting proposition. So I'm long. I will hedge short once it bounces, goes up. Again, the analyst target's over 4,100 for this year, and it's currently closed at 27.76. It is up in after hours. I don't know how strong it'll open tomorrow, but we'll watch this carefully. But I do believe Amazon is worth considering as part of a holding for the next 5 years. But of course, this is not financial advice. So big thank you, everybody. Hope you like this. Let me know if you'd like to do more stock analysis stuff. As you know, we've all learned that crypto can be very, very risky if you're not in the right names. And sometimes markets are flat. And we're in that wishy-washy, choppy period right now until, I guess, the Fed talks in March. So hang tight, everybody. In the meantime, we're going to keep on analyzing and finding good names for you to think about as a good long-term investment to get us through the next 5 years. So thanks, everybody, for being here. And a big thank you to the moderators in the chat. See you all soon.